Hello, my name is Russell Myers. Welcome to Issues Unite. All right, so the main topic of this is real estate investment. But let me start off with something else. There are still a bunch of people that are out there pushing capitalism. Of course, the libertarians are saying, what we've got isn't real capitalism. Real capitalism is small businesses. Well, without regulations to limit the size of businesses, socialist policies limiting the size of businesses, how do you limit the size of a business? They never want to answer that question. Of course, a lot of the people that are still pushing capitalism are people, and I love capitalists who say, well, corporatism isn't capitalism. I wonder how many of them have, you know, retirement accounts or investment accounts that are invested in the stock market. You know, and some of the worst about this are day traders. I'm going to tell you, if you have an investment account, a retirement account, or you're a day trader and you call yourself a capitalist because of it, you're not a capitalist. You don't own any capital. All you are is a dingleberry hanging on the ass of the oligarchs. That's all you are. Accept that. Look in the mirror. Tell yourself this. You know, when they decide to wipe you off, you're gone. Yeah, you're flushed. You got nothing. You know, capitalism. Oh, it's so great that we lost 140,000 jobs in December. In December. You know, that's the, shopping time of the year. That is when the most jobs are supposed to be created. But we lost 140,000 jobs. All right, so let's get into real estate investing. All right, there's a lot of people that are, there's conflicting numbers we're hearing here. Oh, well, the real estate is up so much. Well, yet in large cities, rent is being forced down because nobody has a job to pay the rent, and so much property is sitting empty. Houses, apartments, hotels. I mean, right now, this hotel room I got at a much lower rate than I normally would, but if all of this is doing so well, and you've got shopping malls and business properties that are sitting empty and more going empty all at the same time. So why would real estate be up? Well, here's one reason. Because owners are holding on to their property because they are afraid that the real estate market is going to crash soon. They are listening to these reports. So if they, especially residential real estate, if they sell their property, turn around and buy something that probably costs them more because the market is up, and then the market crashes, well, then they're underwater. This is what happened in 2008. What is holding the market up under these conditions? There's virtually nobody buying, hardly anybody selling. Now, of course, right now, at this moment, equity investors, landlords, apartment complexes, whatever, are not, they're not going to sell right now because nobody's going to buy right now because of the eviction moratorium. Would you, as an investor, buy a property during an eviction moratorium, a rental property, during an eviction moratorium, when you know you're not going to be able to collect rent on it for the unforeseeable future? You got people that are $5,000-$6,000 behind on rent. You can try to collect that, but if they don't have it, how are you going to collect it? If they don't have it, they don't have it. You know, the eviction moratorium was extended through January 31st. But what's going to happen after that? We don't know. Of course, eventually this is all going to crash. I had somebody saying, "Oh, well, just wait until the real estate market crashes and then buy property up at pennies on the dollar." And I've said something like this, but I said, it's not going to happen soon. All right, so let's say you want to do this. So you wait until the real estate market crashes. Okay, by the time that happens, look at what is happening right now with people that have been unemployed for close to a year. Their credit card debt and so forth is through the roof. It's very likely their credit rating is just destroyed. If it's not destroyed now, wait until the eviction moratorium happens and they cannot pay their back rent. And what happens to their credit rating? Are they they haven't had money to pay rent. They're not going to have money for a down payment. So all of this serves to completely decimate any market for anything that will sell. You might buy that property very cheap, but you're going to have to be prepared to hold on to that property for a very, very long time. And if you hold on to it for a very long time, you're going to have to invest more money on maintaining that property. Meaning you're going to have to keep utilities, especially in harsh climate areas, because a property that sits empty with no climate control decays rapidly. You let pipes freeze and they burst. You're going to have to probably invest in some kind of security, because if that property is sitting empty when millions of people are evicted from their residences and they are desperate for a place to live, well, yeah, if they're desperate enough, they'll break into, abandoned properties just to have a roof over their heads. Other people are going to be so desperate that they will break in and rip out copper wiring, fixtures, any appliances. So either you're going to deal with that or you're going to have to invest in some kind of security. You're going to have to pay taxes on that property for as long as you're holding it. And you don't know when any market may recover. Because people that are deep in debt are going to have to pay down that debt before they can even consider buying property. After this all happens, rent is going to plummet. what is happening right now. You see rent going down, and equity owners are having to compete with each other by lowering the rent prices. So even if you invest when the market is down, what you're going to get is much lower income from that property. So why is the market still up anyway? Well, mostly because the Fed is bailing out the mortgage market. The Federal Reserve is currently buying $120 billion worth of mortgage-backed securities every single month. And they don't expect to stop this until late in the year, late in 2021. So they're planning on keeping this going basically another year, possibly longer, because the end of the year is the soonest that they expect to end these programs. Well, as long as the Federal Reserve is buying out mortgage-backed securities, then the mortgage market is not going to crash. It may drop, but it's going to be highly cushioned. Even in 2008, when that crash occurred, the Federal Reserve was not buying out mortgage-backed securities until after the crash occurred. At this point, the Federal Reserve has been buying mortgage-backed securities for months. So that is one hell of a cushion, $120 billion per month. That is over $1 trillion in a single year. But they're not doing this to protect the residents. They're doing this to protect the banks. They're doing this to protect investors. So, yeah, I guess if you're, looking to invest in real estate, I can't stop you. But you really have to look at what is involved. Just because you have a small business, or you're a business manager, or a day trader, or have a retirement account, that does not mean in any way that you understand economics. You understand the stock market. You understand how to balance a checkbook. But if you can't look at the larger picture and understand this on a macro view, then you don't understand economics. Finance and economics may be tied somewhat, but they are completely separate issues. You have to study each one separately and then bind them together. All right, share this video. Talk about these subjects. If you can, please donate $1 a month to help expand the channel, and I will catch you in the next one.